to touch Tesla for a second, we're an investor in SpaceX also. And they just sent a Tesla car around the sun, just past the sun. I was reading the paper the other day. Just went around the sun. That's pretty cool. So there's all these things that are happening in the world that are, that are providing growth. I mean, Elon Musk was talking about how they want to set off nuclear weapons and nuclear bombs in Mars to create an atmosphere. So, I was talking to Gwen Shotwell.
Can I just ask you? Go ahead.
So I was speaking with Gwen Shotwell about a couple of weeks ago, and she is the president and COO of SpaceX. And she said that, in her opinion, the only one who has a bigger vision than Elon for SpaceX is her. And she was talking about how she expects to get to other solar systems, other galaxies. That's where she thinks to perhaps meet whoever is there.
But Ron, sometimes you make these investments and it may take a very long time to pay off. It may not pay off. In the case of Tesla, I think your cost basis is $218.74. That's just around where the stock is trading right now. This is one that you've been.
Is that exact, Bex, or is that the?
That's what.
Yes.
I'm not sure. My point is that your cost basis. Not to say that this won't eventually pay off and be a great investment for you, but to this point, it has not been. It's something that you're waiting for because maybe it's got a long lead time. How do you determine between the ones that are going to pay off and pay off quickly? How long do you have to stick around, and what do you think about the Tesla investment right now?
Well, with Tesla, there are many investments that we've made where it's been a very long incubation period that we have made, which is taken for the investment to prove out. When we invested in Vail between 1996 and 2006, we made a very modest return, 50, 60, 70% over 10 years, and then we made 7 or 8 times our money. When we invested in Wynn Resorts for 2001, we were one of the founding investors. And Steve Wynn invested $250 million, and a Japanese investor invested $250. And he told me that there will never be another investor in our company except for you, if you want to invest. And I'd like to have you as an investor. And so we invested after we studied the land that he owned and what he was planning to do. We invested $25 million. That was at $20 a share. And then when he ultimately went public, he couldn't get 12 people to sit in a room with him. And it went public at $15 or $16 a share, or $13 a share, and we invested another $25 million. No, maybe we invested $50 million at 20, and then 20, and then when it came public at 13, invested $7 or $8 million, 7 or 8 million shares, and ultimately the stock went to 150, and so it was down after we invested. It was down 2 or 3 years later. And then people would say, I don't want to invest because it's not going to be a casino for 5 or 6 or 7 years. We invested during that period. We invest all the time when businesses are growing. When Tesla's case, Tesla, when we invested in 2014, the revenues were less than $3 billion a year, $2.7 billion. This year, the revenues are going to be about $27 billion. So the company has grown 10 times in revenues since the beginning. Then they were sort of struggling and producing cars. And next year, I think they're going to do $35 or $40 billion in revenues. And I think in 2 more years, they're going to do $100 billion in revenues.
Ron, in October, well, just to run through quick numbers, you just answer these for me. In October of 2018, Tesla was your 8th largest holding. Today, it's your 13th largest holding. That's not because you've sold shares, I take it. Is that because the company's shares are less valuable, or because you've invested more in other companies?
That's because we haven't sold any stock, that's because the shares in Tesla got us. So we talked about investing at $220 or $218. Mm-hmm. It went up to $380, and now it's back to $220, $225 with some self-inflicted wounds. And so we spoke about this, and I was saying that you invited me to come on when it was 380 and say take a victory lap, and I said it's way too early for a victory lap. There's no victory here, but I think that the opportunity here, there's 90 million cars a year that are sold, and our guy is now going to sell 350, 400,000 cars. Right now, you're able to expand in a time when no one else is expanding in the automobile industry. So they're able to build now in China with all the learnings that they've had in the United States. They're building for 70% less than it would cost for the same cars to build in the United States, and 30% less than it would have cost to build a year ago. And so what I think is that when we started looking at Tesla 10 years ago, 12 years ago, the cost of a battery for a car was $100,000. When they went public, it was like $30,000 or $35,000. They're now somewhere a little bit over $10,000 on the way to $5,000. Then you had 200 miles that you could get in a battery. Now you can get 370 miles. Pretty soon it's going to be, this year, I think it's going to be over 400 miles. So the quality of the car has improved. The distance has improved. The opportunity has not shrunk. And in fact, the reason they have this opportunity is all these car companies have hundreds of billions of dollars invested in plants that make motors. So their business is making motors. That's what they do. They make motors. So if your competitive advantage is you make motors better than anyone else in the world, and some guy comes along and says, hey, you know what? All that stuff, all those motors you make, we don't need them anymore. Are you going to drop all the motors that you're making and go make a battery where you're 5 or 10 years behind? So Tesla has an opportunity because other people are sort of slow walking. The guys in Germany are finding their leading industry in Germany. I think that 1 out of 10 people in Germany is employed in the automobile industry, 1 out of 7, something crazy like that. And they're saying, why aren't you guys making battery cars? The reason they're not is the unions are heavily involved in the management of those companies, and all those jobs that they have in making cars will be lost. All those investments that they have are stranded investments in making. Volkswagen's going to be a competitor, but the other guys are just going slow about this. Volkswagen is really making a big effort. Other guys aren't. Oh, one more thing, that now the law in the United States and elsewhere is that they understand that when you burn gasoline, I have other ideas to talk about too, by the way. Okay. When you burn gasoline, it doesn't help the environment. Right. And so they say, okay, there's countries all around the world that are banning the production of gasoline cars. In addition to that, they're saying if you're producing, in 5 or 10 years, in addition to that, if you produce these cars, you have to get a credit by saying that you're also producing a not polluting car. The cars that Tesla has don't pollute, obviously, because they're working batteries. Tesla is now selling $800 million a year of credits, probably $1 billion this year coming up, of credits for giving their fleet to Fiat.